Hi there, here's just a quick video on some of the threats to the process of globalisation which are apparent in the world economy just at the moment. Globalisation can be defined in many different ways. The definition I like is that it's a process in which national countries, national economies become increasingly integrated and interdependent. Many different ways in which you can interpret globalisation. One of the key ones is that trade to GDP has been rising for most countries. That's the value of exports and imports added together, expressed as a share of GDP. So we've seen an increase in trade. We've also seen a big rise in financial capital moving across national boundaries. For example, short-term banking flows, money flowing across national borders into different stock markets and bond markets, for example. And we've also seen significant increases in the value of foreign direct investment, cross-border merger and acquisitions between countries. So, for example, for developing nations, foreign direct investment, or FDI, is now far and away the biggest single source of external finance, ahead of remittances, ahead of debt and equity flows, and ahead of aid. But FDI is also the most volatile component of external finance. We've seen the emergence of more global brands, including from emerging countries, especially China. Globalization has also led to a deeper specialization of labour. A product may be the work of many hands. The iPhone has components coming from tens of different countries. The emergence of supply chains, new investment routes. China, for example, is developing the new Silk Road idea, the One Belt initiative to develop new trade and investment pathways involving big infrastructure spending in rail and high-speed rail and road, etc. We're seeing increasing labour migration within and between countries. That's become a big aspect of the world economy. Controversial issue at the moment, obviously. And crucially, I think globalization is also an increase in connectivity. The speed and the intensity of global mobile telephony and Wi-Fi connections is increasing. This little graphic in the bottom right here shows a kind of heat map of internet usage around the world, but note there's a significant digital divide in terms of connectivity. Globalization brings many advantages. The process of globalization encourages producers and consumers to exploit the benefits from division of labour, from specialisation, from trade, and also from economies of scale. So when you get a question on globalisation, bring in some of the advantages of trade into your answer, trade creation, and the impact on welfare. Trade makes markets more competitive, more contestable, and that can help to lower the scale of monopoly profit and also incentivise businesses to seek cost-reducing innovations. Growth has been a driver, particularly in Asia and more recently in sub-Saharan Africa, in lowering the incidence of extreme poverty. Per capita incomes, PPP adjusted, have grown, and now less than 800 million people, according to the World Bank, are living on less than $1.90 per day PPP. So globalization has been a factor, reducing extreme poverty, although it's still very high, and of course there's another inequality issue to go with that. I think there are gains from the free movement of labour between countries, and I think also there are significant gains and advantages in the dynamic sense from the diffusion, the spread of ideas and skills and technologies across national borders, oftentimes helped by movement of labour. Globalisation has also involved the opening up of capital markets, increasing the opportunity for companies and governments to borrow money to help overcome perhaps the domestic savings gap. Companies and governments can now go overseas to raise money in Eurobond markets, and companies can seek a listing in foreign stock markets. Globalisation has also increased awareness generally, I think especially amongst young people, about the big challenges of the age, the challenges of climate change, the issues of wealth and income inequality. And globalisation, through transparency and information, can oftentimes expose poor government, corruption and poor governance generally, and perhaps lead to better labour protection. Although of course oftentimes this requires international minimum standards. There are critics of globalisation, many of them. What sort of things do they point to? They argue that globalisation, whilst it might have lifted many people out of absolute poverty, has also been a factor in many countries causing growing income inequality and relative poverty. That, of course, brings its own political and social tensions. So this is a huge issue, and the inequality one is well worth revising. The fast growth of GDP in the world economy is also causing, of course, environmental stress. We see the threats to global commons, from irreversible damage to ecosystems, degradation of land, fall in soil quality, the rapid loss of biodiversity, and of course the growing problem of water scarcity. So has globalisation amplified and accentuated these major environmental threats? And I think point 3 is important. Globalisation involves greater integration, interconnection, but what that does mean is that systems and countries can become more fragile. A butterfly can spread its wings and flap its wings in one part of the world, and it can have a significant reverberation across international borders. We see big volatility in capital movements, big changes in trade flows. Trade imbalances, of course, are a big issue, causing rising protectionist sentiments. So in a globalising world, there are winners and losers. Some countries are building up huge current account surpluses, others running unsustainable deficits. And in many countries, particularly developed nations, there's been a kind of hollowing out of the labour market. A lot of traditionally secure, well-paid manufacturing jobs have been, and service sector jobs for that matter, have been lost as manufacturing has shifted to lower cost centres. So point 5, of course, is linked to point 1. Oftentimes, globalisation involves the rise to prominence of global brands, standardised products. To what extent is there a disadvantage in terms of the threat this poses to local indigenous producers? Do we end up do we live in a world of homogeneity rather than heterogeneity in terms of the products we are able to have, we can buy? And crucially, as many of you will know, as part of your revision, there's been huge criticism of transnational corporations, MNCs, in terms of sometimes their worker standards, lax, poor conditions for workers, health and safety, and crucially, the issues of tax avoidance and a failure to address environmental issues. There's no shortage of critics of globalisation. One economist who's been prominent in the debate is Professor Joseph Stiglitz, who's argued that the current process of globalisation is generating unbalanced outcomes both between and within countries. Wealth is being created, but too many countries and people are not sharing in its benefits. And on this graphic, I've just made a distinction between economic imbalances between countries, trade, foreign investment, and big embedded imbalances in access to global markets, ideas, digital access, health and education, and imbalances within countries, inequality within a countries, differences in unemployment and employment rates, and big regional divides, including between rural and urban areas. So if globalisation is leading to economic imbalances, this is clearly a threat to the process of globalisation. Indeed, we see in recent years that the rate of growth of world trade has slowed down. Look at this table in particular. 2009, there was a collapse of world trade. Indeed, that was obviously the bad year for the world economy. There was a recession. There was a rebound in 2010, pretty much expected. But since then, the growth of world trade has slowed right down. Capital Economics in 2015 suggested that the future of the world economy may be less about globalisation and more about regionalisation. Why is trade slowing down? Well, partly it's because many advanced countries, Japan, the United Kingdom, for example, the Eurozone, they're growing less quickly. And these are rich countries which traditionally have been right at the forefront of the world economy. So their slow growth is hitting trade. The pace of trade liberalisation also seems to have slowed down. Most of the big cuts in import tariffs have already happened. And in fact, we're seeing the rise of non-tariff barriers, in particular countries looking to protect their domestic markets. Point 4 is that as a country or as a region becomes better off, typically we buy more services rather than manufactured goods. And actually services as a share of GDP and global trade in GDP in services is much less at the moment. And that can change. A lot of countries, for example, are thinking about growing their tourist industry. But again, even that is open to threat, partly as a result of the threat of terrorism, geopolitical uncertainty. And technology might also be holding back trade. In particular now, companies can actually manufacture the parts they need using 3D printing. They don't necessarily have to ship a product in from overseas. All they need is a 3D printer, the right software, the right materials, and actually they produce the product themselves. If you're a dental surgery, for example, you could actually print out a replacement tooth for your patient. If you're an aircraft company or a car maker, you can print out specific component parts using 3D printer without necessarily having to transport it from one country to another. Increasingly, therefore, globalization may be being replaced by a process of regionalisation. And we see this by the growth in regional trade agreements. There are now over 300, including, for example, the Trans-Pacific Partnership. So this growth of regional trade agreements is a really important aspect of the world economy at the moment. Pacific Alliance 2013, a trade agreement between Chile, Colombia, Mexico, Peru. The TPP, of course, signed in 2015, is potentially a major free trade agreement, although whether or not it's going to be ratified is open to question. But look at the different countries in there. Chile is in there, Malaysia, Mexico, Singapore, USA, Vietnam. These are countries with very, very different levels of economic development. To what extent will that generate a lot of extra trade and investment between those countries based on the law of comparative advantage, of course? One reason why globalization is under threat is the rise of non-tariff barriers, NTBs. A good example to go in the exam was 2 or 3 examples of non-tariff barriers. I could have put in things like quotas and things, but increasingly in the world economy there are significant technical barriers to trade, stringent health and safety standards applied to products. That increases the compliance cost of getting goods and services into different countries. Governments preferring domestic producers and offering generous subsidies to loss-making airlines and coffee producers and cotton farmers, etc. And kind of murky protectionism, including measures that indirectly discriminate against foreign workers and investors, and a move towards managed exchange rates, deliberately attempting to sort of manipulate the value of the exchange rate to affect the price of imports and exports. So what we're seeing is the rise of non-tariff barriers, which is indeed a threat to globalization. Globalization is not inevitable. We've been through a remarkable 15-20 year phase of rapid growth of world trade and investment, but that now seems to be slowing down, and from all kinds of different directions. Globalization is a process which may have just run its course a little bit for the time being. It'll be interesting to see what happens in the world economy in the next couple of years. Thank you.